Right, hello everyone, and just another update from us on markets over the course of this week on a somewhat troublesome trading week up until the back end of yesterday and today. It's been pretty clear cut, but up until then, not as clear cut. Now we'll have a flick through the calendar, we'll have a look, and we will try and figure out where the direction has come from. First things first, Monday morning we had a bit of negativity to start the week. Stocks were lower, markets were lower, risk assets were lower. Probably driven by the industrial production figures out of China. Now markets starting on the back foot off the back of these figures. Reason being that the Chinese economy is the second largest economy in the world. So if industrial production in that economy is low, you think about the amount of things that we will use on a daily basis, all of us, and every day of our lives. We will use a lot of things that say made in China on the back of them. So industrial production is weak in China. That does not bode well for the global economy, especially when you weigh in the potential risks of a global economic recession that are a quite realistic possibility. We'll then flick across later on through the week. The market started to pick up a little bit, stabilize a little bit. Another thing of note, I think, is the minutes across Wednesday. Minutes didn't really say much to change, really, to be fair. They did say that they were going to hike or continue to hike interest rates, did not give an exact figure. Did not give an exact figure for the amount that they're going to hike in September, and then following on from that, I anticipate probably a 50 basis point hike in September, followed by another 25, and then I think that will probably conclude this hiking cycle for the Fed. They kind of did suggest that they think markets were getting ahead of themselves, thinking that the Fed are going to cut rates again next year. So I think markets have probably started to begin to price out the potential rate cuts, and I think that's why we've seen some dollar strength then come into the equation over the back end of this week. I'll flick across to the charts now in a second, but one thing I want to point out is a little bit closer to home in the United Kingdom. The UK data we had for this week, the unemployment rate on Tuesday, now we did have to see a little bit of spike higher if that was sold back into, but the unemployment rate did not change, 3.8% the previous month. Consensus was 3.8. Trading economics forecast then for 3.8 as well, but then the actual comes in 3.8. So no change on that, no change at all on that. Claimant count change, which is similar to the jobless claims figures out of America. That shows a decrease of 10,500, as you can see here, 10,500 from then this figure. So further decrease on last month's figure. Further 10,500 drop in the amount of people claiming unemployment benefits. So the unemployment rate, not enough to change the unemployment rate, but a slightly positive figure all the same. I then want to come through to Wednesday and have a look at the CPI figure out of England, or the UK, sorry. 10.1%. Previous was for 9.4. Consensus was to come in at 9.8, and what we were expecting then following that is then an increase in inflation, a higher CPI print over the 9.4 we saw last month, and that did come in, as you can see here, at 10.1% for this month's figure, for the year-over-year figure. Now that is over the top in terms of inflation. Again, inflation continuing to be the problem the central banks are trying to deal with. Not so much employment, it is inflation, but we saw slightly positive unemployment figures on Tuesday, slightly positive labour market figures. We then come through to Wednesday, we get higher than anticipated. I don't want to call it positive figures, but definitely higher than anticipated. We come then down to retail sales, right? Early doors this morning, 7 o'clock this morning. Previous was minus 0.2%. We were expecting a further decrease of minus 0.2%, but we actually came in 0.3. So we've had a bunch of positive figures out of the UK this week, a bunch of higher than anticipated figures. We then come to the chart, look at cable, and it's doing that. That's what it's doing. That's why our charts are so important to us. There's no point in having this bias in terms of fundamentals. If this is just going down and continues to trend lower, there's no point in blindly buying off the back of some opinion that might not even be right. Now, if you've got that opinion, this chart does start to form a bottom and you do get some bullish indication, then that's fine for some bullish fundamentals. That they're the best trading opportunities when the fundamentals align with the technicals. But if we're blindly buying things, not taking the full context into consideration, we could be leaving things out. You see a raft of positive data out this week, but then you need to remember that the Bank of England have suggested that there will be a recession in Q4 of this year, which will then continue into the 4 quarters of next year. So over a year-long recession in the UK would suggest that any of these figures are then irrelevant. We would need a little bit more than just a few positive figures to change the path of cable at the moment. And I think these lows are on to be tested. Well, I think we're quite close to it now, but we can see here down here you know, just across here, you know, where's the lowest down there, 1750, as you can see there. Did pop a little bit below it, but we're up at what, 1838 at the moment. Does look like those lows are on to be tested. We're a good 80 pips away from it now, 70, 80 pips away. So not likely to be broken today. Could be tested into the close today, but you know that is a big distance for cable to make up. Flicking across the euro dollar, and the US dollar has continued to move higher again as of this week. This rising wedge then broke out on Monday. We had a little bit of consolidation over Tuesday and Wednesday, and we have picked back up in terms of selling across Wednesday, Thursday and Friday. We are then through these lows here. If we break down the time frames a little bit more, we're then through these lows, so that could have been presented as a second entry point on a move lower, but that is not positive for euro. That is not positive for sterling, but it is positive for the dollar. What else is positive for the dollar is if we flick across to the US 10-year yield. I think looking at this, I did look at something like that, you know, this kind of level across here. Bit of a neckline on this inverse, or not this inverse, what am I talking about? This head and shoulders, bit of left shoulder head, bit of a right shoulder here. Hasn't really played out. What has happened is that we have failed on a break and we have pushed back higher. We flick it down to this 4-hour time frame, which I think is more relevant intra week. We are clearly trending higher. We'll just get rid of that so we can see the price action a bit better. We are clearly trending higher, clearly printing higher lows and higher highs. This move is continuing to accelerate right now, and even the time I spent, you know, over the last kind of hour, so even over the last hour, you know, these moves continue to move lower. This US 10-year yield continues to grind higher. So heading into next week, I think that will be important. If this uptrend continues on this US 10-year yield, it will continue to lend support to the US dollar, which will then in turn continue euro dollars move lower, continue cables move lower, and I think they are probably should be the main focuses of attention heading into next week. Reason why I wouldn't look at stocks really for a move higher is I think after the bull run we've had over the last week or two, in stocks, I think any dips may continue to be bought in stocks, certainly while that uptrend is still intact across these kind of 4-hour time frames. I think I will continue to want to be a buyer. Always kind of favor being on the buying side of a stock index, but you know, they could easily turn lower off the back of some dollar strength as well. Remains to be seen how that plays out going into next week, but I think selling rallies on cable and selling rallies on euro dollar continues to be the way to go. You know, dollar yen still trucking higher. Dollar yen's one to look at, but I think euro and sterling do not seem like they're having fun. Can we see a test of parity on euro dollar? 50 pips away today, maybe not today, but into next week, I think that we could, as the euro is not in a fantastic position at the moment. Flicking back to the calendar though, if we have a quick flick back to the calendar and look ahead into next week, we can see that we are met with a calendar without a great deal of information on it. We have some figures out of the US, some new home sales figures on Tuesday, durable goods on Wednesday, GDP on Thursday, some personal income and expenditure figures on Friday. So a raft of US data out next week. Not the highest impact of high impact figures, but that GDP figure will probably be the main focus of attention into next week. Although it is a second estimate, so we've kind of had the first estimate, and we haven't had the final figure, so it's a kind of a bit. Yeah, it's a bit of a wishy-washy number, I think. But yeah, there's definitely a bit to go off in terms of the US next week. We do have some PMIs on Tuesday, which again, if they are lower than anticipated, that could continue those euro dollar and cable moves lower. We then have some business climate figures on Thursday out of Germany and consumer confidence figures out of Germany. Consumer confidence figures out of Germany do get quite widely looked at by markets, so that'll be something that we will keep an eye on next week. But yeah, not a great deal of information out over the course of the week. But yeah, that's what we have to think about going into next week. I think selling rallies on euro dollar, rallies on euro dollar and cable look like a good bet. Apart from that, we'll have to see how it plays out going forward. Gold lower is another one as well. If you've got dollar strength, gold lower is trending higher or trending lower, sorry, quite significantly as well as we speak. So they're probably the assets to look at. Apart from that though, I'm going to wrap it up there then. We will have another update next week, but until then, do have a good weekend. Do get some rest and relaxation if you can, ready for another week of trading next week. I will do the same. I'll try and enjoy my weekend, switch off, recharge the batteries, and we will be good to go again come Monday morning. So yeah, enjoy your weekend. Have a good one, and I will speak